Welcome to the December 19th, 2022 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, the weekly fast-paced tour of the global financial markets, and what a week it was. We're going to cover all the drama. I'm also president, McGowanGroup Asset Management, based right here at the Crescent in Dallas, serving affluent families, business owners, and retired investors. We are grateful that you tuned in, and we'll get started with the drama of the week, and that is S&P 500 now down 19% actually for the year after Friday's sell-off. What happened? You know that the Dow actually hit 35,000 on Tuesday, a huge rally, finished the week well below 33,000. What happened? Well, it was the Federal Reserve inserting themselves to create drama artificially again, and we're going to cover exactly what they said and why. Well, here's the spike I mentioned on Tuesday. Boom, a nice rally, and then a huge sell-off at the end of the week. What happened? Well, Tuesday inflation numbers came out for the month of November, 0.1%, 0.1. Not 1, but 0.1. Take that times 12, you get 1.2. Right? So you'd annualize at 1.2 just for the month of November. That was great news on inflation, and the markets reacted well. Equity prices went up. That says, okay, we may be past the peak inflation. I'll show you some evidence on that in a second. Then Jerome Powell comes out. The Grinch who stole Christmas, Fed Chair Jerome Powell, comes out, gives a speech. Acknowledges a little bit that inflation might be coming down, but says, we don't care. In fact, we're going to continue taking the rates up, and as the market digested it, the cost of capital going up, companies have to adjust, and he finally gave some definition on how high they think they will go. The markets have digested that this week with the sell-off. But you've got other things that are more important than that, which I'm going to cover. Some of them are going to happen in January. Now, the Fed did some projections that we'll get to in a second. This is the S&P 500 earnings per quarter. So you take a unit of the 500 companies, and how much money do they make every quarter, adjusted for their weight in the index? Well, here's the graph. This is the pandemic, $25 per S&P batch, $25 for the S&P per quarter after tax. Then it goes to 50. That was really good news. Then it goes to 55. Recently we had a profit recession, and some of that was energy costs. We'll get to energy in a second too. Then this is the S&P earnings forecast going forward. Then earnings start to rise. And that is really, by the end of 2023, you're hitting record levels in profitability, despite these other projections for anemic growth next year. So here we've got the T-bill and the long treasuries. This is the bond market moving the opposite way of Jerome Powell. See this white one? That is Jerome Powell taking the short rates to 4.5%. At the same time, the 10-year and 30-year Treasury went below 3.5%. So the inversion, some people say, is a recession. But it's also the premise, Jeremy Siegel at Wharton said this week, that they're going to have to lower the rates back down by the end of 2023, even though Fed Grinch Powell said we're not going to lower them anytime in 2023. So that's part of why the market reacted that way. But there's already evidence that inflation is coming way down. The Federal Reserve actually says, and this graph, you can go to federalreserve.gov, click FOMC, and you'll see the projections right there. Well, it's worth looking at because they have quite a few governors and presidents and economists and a whole team of chief economists working on this. They think inflation's going to be down to 3.1 next year for the whole year. Wow. And so, in other words, that's good. Then 2.5% for 2024, back to their target by 2025. Okay, so inflation, they believe, is coming down. That's about half of what this year was. That's good news. Change in GDP. I've got some updates here on the other economists too. What's the economy going to do for 2023? I think we all want to know, because you keep hearing looming recession and dire predictions. And wow, if there's going to be a recession, the Dow typically goes down like 20% and the NASDAQ goes down 30%. But we hadn't had a recession, it's already done it. Well, what does that tell you? The markets may have adjusted for some more bad news that isn't even here yet. Atlanta Fed says this quarter, 2.8% annualized growth for this quarter, and the projection by the Fed and other economists was a fraction of a percent. So the economy is actually doing better than projected this quarter right now. 2023, real change in GDP, just 0.5% anemic growth. Wow, but it's not a recession in their projections. Fed funds rate goes to 5. They said it right here, 5.1 actually. They don't even go by tenths of a percent, but 5.1 was the consensus. So they're going to go from 4.5. February 1st, they probably go up a quarter, and maybe in March they go up a quarter, and everybody knows it now. Real change in GDP. Here we go. Look at this. For this quarter, they were projecting 0.2%, and it's really 2.8 according to the Atlanta Fed, who's been better at predicting the current quarter than the Bloomberg economists. And there's your 0.5% real GDP growth. We'll keep you posted on how those change and if any of them go negative. That would be a contraction. What's done well this year? The energy sector, 58%. Now that's primarily the huge gain in exploration and production. The pipelines are up about 30%. That's been the sector to be. And of course, ExxonMobil just forecasted for 2027 that they're going to double profit and cash flow in the next 5 years. All right, this is inflation actually coming down. When did inflation peak? June. This is the 3-month annualized rate of inflation. And if you exclude shelter, you get down here. Jeremy Siegel cited the fact that housing is coming down fast, but we don't have the numbers yet. So the inflation pressure subsides. That's your weekly briefing right here. McGowanGroup Wealth Management, a team of 10, the team that cares about our clients, because this is our weekly client update. We're glad you've tuned in, so be sure to subscribe. The research that goes into this, Bloomberg, Wall Street Journal, Fox Business, CNBC, we consolidate it all right here for you. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.